Wall Street Journal says the anywhere but the US trade is gaining traction. Markets around the world are up when you exclude the USA. And now CNBC is saying emerging markets are said to see the next bull run as the sell US narrative gains ground. Today, I'm going to tell you where these emerging markets are and how you can take advantage of it. I'm Andrew Henderson, the author of this book called Nomad Capitalist. I'm someone who walks the walk. I have many investments all around the world in emerging markets in the global south. That is where I am moving most of my money. I believe in it, and I'm looking 10, 20, 50 years in the future because the places where I spend time, I believe they're heading in the right direction. So my belief of the sell US narrative is a little bit different than people who are saying we can't trust Trump, we can't trust the US, we can't trust with the tariffs and all the stuff they're doing. Let's go forge our own path. I've been telling you for years that's going to happen. I've been telling you for years that if you have a Western passport, you need a second passport because you're going to get swept up into that and you're going to lose money in this new, very global, multipolar economy if you have the scarlet letter of an American or potentially other Western passport. What I see and why I've sold some of my U.S. stocks and why I've really trimmed down my investments in U.S. companies is I see much better opportunities all around the world for better income, dividend-paying stocks that charge zero or much lower tax rates than the U.S. does on those dividends, so I keep more of my money to live and to eat. I also see better growth potential in emerging markets. And so we're going to talk about that. If you want to see more content about emerging markets, please leave a comment, emerging markets. We will continue to talk about this if you want. If you don't, then we won't. Here's the headline, CNBC.com. They talk about how Bank of America is heralding emerging markets as the next bull market. A dented confidence in U.S. assets has fueled the bullishness for emerging markets, and analysts are saying that recent events in the U.S. have reinforced the need for more diverse geographic exposure. I've been telling you that since 2012, and I believed it ever since, and I have continually doubled down on living in, investing in, hiring in, doing everything in, banking in the emerging world. Here's the story. Emerging market stocks are in the spotlight again as the sell U.S. narrative is gaining fresh momentum following Moody's recent downgrade of the U.S. credit rating. Bank of America, in a report, heralded emerging markets as the next bull market. They say the weaker U.S. dollar, the U.S. bond yield top, the China economic recovery, I can tell you that's been a big one. Chinese stocks have been going crazy this year. Nothing will work better than emerging market stocks. That says Bank of America's team, led by investment strategist Michael Hartnett, said in a note. JP Morgan also upgraded emerging market equities from neutral to overweight, citing thawing U.S.-China trade tensions and attractive valuations. And so let's just start right there. None of this is investment advice, by the way. I don't know your profile. You should obviously do your own research and not just do what I'm saying, but you should understand the greater concept here. If you look at stocks in the United States and other Western countries, but particularly the United States, the price to earnings ratio is really high. So much so that Warren Buffett, Berkshire Hathaway, they're parking $300+ billion in cash. A little bit of that is for insurance loss reserves. The rest of it is, we think the markets overpriced. And Warren Buffett, one of the most through and through American patriots in the investment world, what's he been doing? He's been investing more overseas, particularly in Japan. We've told you before, he's invested in Japan's Soga Shoshas, the investment houses, the conglomerates, the kind of the Berkshire Hathaways of Japan. He's been making other investments overseas. I think they did sell their position in Brazil, which went crazy. But you will find much better valuations. One of the banks we've told you about for years is in the country of Georgia, where I have a home. Bank of Georgia and TBC, the two largest banks in Georgia, both trade on the London Stock Exchange. They trade in British pounds. And so Bank of Georgia, they bought a bank in Armenia. They're now called Lion Financial Group. When I first bought them, the PE ratio was 2 point something. And it's been in a huge tear in the last couple years, but in particularly even just year to date. The PE ratio is now 5 point something. That's still half the valuation of some of the more affordable U.S. bank stocks. Meanwhile, they pay a higher dividend. That dividend is more tax-friendly in the U.K. And I see a lot more potential in those kinds of markets. I mean, there's not too many unbanked people in the United States or other Western countries. Georgia has done a tremendous job. I've been talking to you about it for about 10 years. And all the technology that they've rolled out and how easy they've made it for people to get in and pay bills and have bank accounts. It is in many ways a better place to bank and a more efficient and an easier place to bank than many U.S. banks. They have more features. You can hold more currencies. And so as a customer of that bank, I said, you know what? I'm going to follow the Peter Lynch model. I'm going to buy that stock. Now, again, you should figure out whether that stock works for you. Don't take my advice for it. But I've done incredibly well for it, because even when last summer, when Georgia got battered by the Western media because they passed a foreign agent registration law and the stocks fell off a cliff, I said, you know what? I believe in the country. I'm going to buy more. I follow the Warren Buffett model of buying more, be greedy when others are fearful, and that's paid off very well. Valuations in China, incredibly attractive. Look at valuations on insurance companies in countries in Europe, for example, compared to the largest insurance company in the world, Ping An. It's 2 point something. Now, Ping An's been a pretty choppy stock, but if you go to places in Asia, if you go to stocks that are in Eastern Europe, some places in Latin America, you can get incredible valuations. You can also get higher yields. And so there are some very attractive valuations. You've seen markets like Thailand and Indonesia get beaten up over this tariff stuff. People who got in at the bottom did very well. You can see that a lot of places I see, particularly with China really wooing the ASEAN economies in Southeast Asia, I continue to buy into Thailand and Indonesia. How do you do that, by the way? It's harder. If you do not have local brokerage accounts in some Southeast Asian countries, you can't buy. If you don't have Indian residents, you generally can't buy Indian stocks. But you can have a bank account, for example, in Singapore, and they will sell you a basket of those stocks as a customer of their bank at a pretty low fee. Who can't buy that? Americans. Why? Because the US has become a toxic place, including for investors. You cannot open a bank account generally in Singapore as an American and make any kind of investments in those emerging markets. You can only hold cash. One benefit of me no longer being a US citizen. But the article continues, a dented confidence in US assets, which kicked into high gear earlier this year, marked up by a sell-off in US treasuries, equities, and the dollar, has fueled the bullishness for emerging markets. The MSCI Emerging Markets Index, which tracks large and mid-cap representation among 24 emerging markets countries, is up 8.55% year to date, compares against a 1% climb by the US benchmark S&P 500 across the same period. Obviously, those numbers will change day to day. Now, there's right places to buy and wrong places to buy. One thing I've said is I like to categorize countries for what they're best at. We compartmentalize here. Our 5 magic words are go where you're treated best. And that doesn't mean taking all of our eggs from the basket we're in and going and putting it in some other basket. I've lived in Malaysia longer than I lived anywhere else overseas. I have assets in Malaysia. I have a home in Malaysia. I have some REITs in Malaysia. Malaysian stocks have not been a great deal. Is this the moment? I do not know. I'm not an investment advisor. You can do that research. But Malaysia has been a market that is perhaps a little bit too developed for my tastes. One of my favorite markets, and I've been telling you about this for over a decade, to invest in Southeast Asia is Cambodia. And I've done very well there. That's more of a real estate market or a private investment market than it is a stock market. But you can also go, there's companies in Singapore, for example, that you can trade companies that do business somewhere else. The argument from people, particularly in the United States, is, well, our S&P 500 companies, they do business globally. And so if you want exposure to all these up-and-coming markets, believe me, Coca-Cola is going to be selling to them. Coca-Cola may be. Coca-Cola stock's been relatively stagnant over the last 5 years. Look at what's happening with these new alliances and the multipolarity of the world. One thing I was reading about in the newspaper in Malaysia a couple months ago was the ascendance of Chinese businesses in Malaysia. And they were talking about how you might go to a Western ice cream parlor. There are Dairy Queens or A&Ws in Malaysia, for example. And let's just say it's 15 ringgit for an ice cream. You can go to some of these new Chinese-owned stores. It might be 8 ringgit or 9 ringgit. And they were interviewing people. They're like, yeah, I like the Chinese ice cream just as much. I'm not going to pay 6 ringgit more. I'm not going to pay 60% more for an ice cream just because Cold Stone Creamery, another brand near where I'm from. And so people really aren't seeing the value in paying those higher prices. I mean, there are Western franchises all around the world, but in a country like Malaysia, this kind of middle-income country, people often aren't willing to pay the premium to go to Tony Roma's ribs versus getting ribs somewhere else. And so you're seeing this greater investment from China into places like Southeast Asia, and the S&P 500 companies aren't going to do as well. These brands from around the world are increasingly penetrating, and I think that whether you like Trump or you don't like Trump, you can't argue that everyone else around the world gets to have their own opinion about the United States. And they're like, hey, you guys don't want to do business with us? You want to tariff us? You want to make it difficult for us? Cool. That's only going to ramp up our domestic production, our regional production, our relationship with China, what have you. And that's backed by the fact that, hey, the Chinese companies in Asia are selling us stuff at a lot lower prices, and we are just as happy with the quality. I'm not saying the quality of everything. I generally don't buy construction products from China. Although I'll tell you what, there are more good Chinese, construction materials when I'm doing renovations. I have been more open to it in recent years than I would have been 10 years ago. But you're also seeing countries like Turkey, for example, big domestic market in we're going to produce stuff that we're going to sell not only in Turkey, but all over Eastern Europe and Central Asia. And we're going to provide a little bit higher quality product than China would, but at a much lower price than Europe, where people historically would buy stuff from. So the idea that US and Western companies are going to continue to be able to sell worldwide, I think there's incredible pressure from the Turkeys, as well as the bigger players like the Chinas. And so those are the places that I want to explore. Another stock market you could explore if you want something a bit more developed is the UAE. Much higher dividend yields, better valuations there. And so CNBC says, is this a start of a new rotation? The events that have unfolded recently have reinforced the need for more diverse geographical exposure, according to Malcolm Dorson, head of the active investment team at Global X ETFs. After underperforming the S&P over the past decade, emerging market equities are uniquely positioned to outperform over the next cycle. Yes, indeed, in 2014, 15, 16, you had this weakness in the dollar, you had this strength in emerging market equities, and they have not done as well in recent years. Now, there's been plenty of outliers. Some of the Georgian stocks that I've mentioned, I can mention plenty others. China was in the doldrums. If you got into China in the last year, you've probably done pretty darn well. But now he's saying on a broader level, you can see emerging market equities outperform. This possible perfect storm stems from a potentially weaker US dollar, which we're already seeing, extremely low investor positioning, and an outsized growth at discounted valuations, he told CNBC. Let me just add this. Every time I open the newspaper, and I get about 12 newspapers in my email inbox every day, all I see is, even when millennials in the US are going to inherit property from their parents, they still don't even know, it's still going to be bad news for them. I mean, people are really struggling to get by in the West. One of the reasons why I say if you're successful and you live in the West is, why do you want to be there for when the next shoe drops? Maybe there's going to be violence, but at the very least, you're going to have more Bernie Sanders types. They're going to be saying, hey, why aren't you contributing more? Because I don't have a good enough life. I'm working 3 jobs to get by. I'm not saying that I take pleasure in watching people work 3 jobs to get by, but do you know what I do take pleasure in? People where I live in Malaysia having much better opportunities than they would have 25 years ago. And if the US and the country where you live in hasn't figured out how to compete, and their companies haven't figured out how to compete against better priced, higher quality options somewhere else, then maybe they deserve to fail. That is the American spirit of entrepreneurship and competition. And what we're seeing right now is Western markets are really struggling to compete as their people have a harder and harder time getting by. So I've been saying for years, opening offshore bank accounts. You can hold other currencies in those bank accounts. Pretty simple. Take the Georgian banks. You can go with a very, very low deposit, show up in person, and you can hold US dollars, euros, British pounds, and Georgian lari. Those Georgian lari can yield as much as 12%. It's been pretty stable against the US dollar recently. Armenia, another country. You need to get a residence permit now generally. It's relatively straightforward to do that. High interest rates on a multitude of different currencies, including they have things like Russian rubles and Chinese renminbi. You want to have bank accounts in different places around the world to hold different currencies, including a place like the UAE, for example, where the Emirati dirham is pegged to the US dollar. And so you can have some diversification with the peg. You get away from some of the geopolitical stuff. You get some geographical diversification, some asset protection, but you still have some of the safety if you think of the US dollar. Other currencies are largely, pegged to the euro, if that's what you want to have. And so what I'm looking at is, how do I do more banking, not only in banking havens like a Singapore, but also in the global south? Malaysian banks, in my opinion, very strong. I take this for what it's worth. I mean, I've had multiple people, lawyers, what have you, say, I don't think the government lets these banks go under. The U.S. has more bank failures than pretty much every country combined. And so I'm not telling you that if you put your money in any Malaysian bank, maybe something will happen, but I feel very comfortable keeping money there. Thailand is a place that a lot of people from China, for example, treat as kind of a second-tier asset haven. And so with stocks being beaten up, that could be a place. And here's the thing. Not only can you diversify your bank accounts, not only can you get some asset protection benefits of keeping assets in different places, potentially you get higher yields or higher returns, but you could also, in the case like Thailand, you put under 300,000 US dollars in a bank account in Thai baht, you get an investor residence permit, and you can go and live in their tax-friendly country anytime that you want. And so if you're saying, hey, taxes are going up where I live, the UK, they're talking about raising taxes, even Reform now is saying we might raise taxes if we get in power. or we're certainly not going to lower them, they said. Why not have a diversification tool in a foreign currency that then with that bank account allows you to get a brokerage account to buy stocks in a market that's gotten beaten up, that peaked, yes, a number of years ago in the 2010s, but that in my opinion is a strong domestic and regional player, is going to increasingly benefit from everything that's happening with the decline of U.S. soft power. And I get a free residence permit that I can go and live there and cut my tax rate probably down to the single digits with their territorial remittance tax system. Like you can see, there's a number of different things that we're doing here. So I'm not sure if the people in the CNBC article are looking at it like that. I'll tell you what, we filmed Live Like a King Bangkok. That's a very luxurious place to live. I've chosen to live in Malaysia in Southeast Asia, but I'll tell you, in either place, I feel more free and I feel more at peace than I ever felt living in the United States, and more at peace than I ever do when I go and spend time in London, for example. And so don't just do the financial part of this. Look at, how am I going to protect my assets by having them in different countries? How am I going to protect myself and my family and my freedom that I can go in and get free residence permits? Let's talk about other places in the global south. You go and put money in a bank account in Turkey. Now, I understand the Turkish lira has had a slide. They're paying like 47% interest on the Turkish lira right now. You go and open a bank account in Turkey with $500,000, they'll give you citizenship. Talk about, if you're a Westerner, a good plan B. Talk about a good backup. You want more global south in your life. I've said it for years from a diversification standpoint. Now they're saying it that those markets are going to start to take off. You could have done very well picking and choosing the right stocks, term deposits, what have you. Now they're saying it's a broader spectrum. Emerging markets are also trading at 12 times forward earnings and a bigger than typical discount compared to developed markets. Statistics from JP Morgan showed. Again, I'm finding stocks that are 2, 3, 4, 5 PE. And again, these are sometimes companies that I know. I'm not saying buy every stock with a 2 PE ratio. Maybe that company is going broke. But I'm saying if I know a bank and I've got a great relationship with that bank, there's banks all around the world in emerging markets trading at very favorable valuations and paying high dividends. Among emerging markets, Dorson believes India offers the best long-term growth play, and also spotlighted Argentina's cheap valuation. We just produced, and you'll see soon, Live Like a King Buenos Aires. You want to see what people are doing there? Go to livelikeakingtv.com, subscribe to see that forthcoming episode. Sovereign upgrades in countries like Greece and Brazil have helped them make them more attractive, he added. EWZ, the Brazilian ETF, has done well in recent months. The US is getting downgraded. Brazil is getting upgraded. I was in Sao Paulo. It is not the most efficient place in the world, but there's still, again, decline in US soft power, exporting more soybeans to China, countries doing well. Greece, for all their problems, they came in and said, we're going to offer a tax incentive to foreigners who move here. You can live there and pay very, very low taxes if you're a successful person in Greece. These places are doing the right things. These are not my favorite countries in the world, Greece and Brazil, but they're doing better than the US. We could be at the start of a new rotation, said Mohit Murpuri, equity fund manager at SGMC Capital. I do like the India recommendation. It's harder to invest in India. I think one of the easiest ways for Westerners to get diversified exposure to India is to have a bank account in Asia, in a country like Singapore, and then buy your Indian investments through there. So, you can't just get a standard brokerage account and buy Indian stocks. And why would you buy them in a US ETF where now you still have, you don't have asset protection benefits, you're tied to the US, it's going to be in dollars. After years of US outperformance, here's the kicker, global investors are beginning to look elsewhere for diversification and long-term returns, and emerging markets are firmly back in the conversation. I've been saying this for years. I'm sure these guys are paying attention to what they're investing in, of course. The average person just buys an emerging markets fund. It has not done as well. What I've done is say, what are the companies that I'm familiar with around the world? What are the things that I'm seeing? Like when I read the Star in Malaysia, people prefer Chinese ice cream. I said, okay, great. What do I do with that information? The more you live this international lifestyle that we talk about, the more ideas you'll get. This is one reason I want you to come to our live event, Nomad Capitalist Live. We've got actual on-the-ground investors from Africa, from Eastern Europe, Central Asia, Southeast Asia, Latin America. We got one of the guys from Shark Tank, Colombia coming. These people know something. You're going to meet people from around the world. They're going to tell you what they're doing. You're going to find people who share your values. Go to nomadcapitalist.com/live. You can learn more about what our event is about, and you'll come to Malaysia and see how great it is. But I've always been a big believer in emerging markets. I think that this broad-based rally that's being predicted is going to be something that you want to take advantage of. And so if you want to get bank accounts, asset protection plans, residence, and citizenship, and get a full holistic plan to protect yourself from the fact that Western countries are going to keep heading in the wrong direction. As that happens, they're going to raise taxes. As that happens, they're going to take away your freedoms. It's going to be more chaotic. Your passport, your home country is going to be more of a scarlet letter. If you want to go and do business in these other places, you're going to have less access to investing in these markets. Americans already do have less access. Have a plan that's holistic beyond just your finances. Go to nomadcapitalist.com/apply. We'd love to help you put together all those different tools that make you a truly global citizen, what we call a nomad capitalist. The things I talked about almost 10 years ago in this book are still true. I still believe them, I still live them, and this is why.
This is an 18th century palace in Lisbon, Portugal, and it's literally one of the most elegant fine dining restaurants anywhere in Europe. And I'm going to be showing you luxury living in Portugal here, and showing you penthouses and palaces for sale that you can live in with some of the best views of the city. And taking you to an exclusive members club that you can join, where old money and new money meet here in Lisbon. We're shopping for top brands along Lisbon's 5th Avenue, visiting a catamaran in Lisbon's harbor to show you how you can buy a boat here, and meeting Michelin star chefs and drinking amazing Portuguese wine to show you the good life in Lisbon. This is how to live like a king.